As the clock ticks down to the introduction of an unprecedented real estate tax in Los Angeles, some top-tier property owners are making offers that are too good to refuse. With the deadline looming, buyers are being offered some enormous rewards if they manage to close off their deals before April 1st. Though it has been dubbed the mansion tax, this local ordinance affects all property sales between $5 and $10 million, which is far less than what is generally considered a mansion in this expensive city. Let's start by looking at the $28 million Bel Air mansion that came with a $1 million bonus from the seller if the sale was closed before April 1st. A Bel Air property that went on auction this month had even more to offer, a $2 million credit if the sale closes by the end of March. That's not all though. Other properties have seen buyers walk away with fancy cars, with a Beverly Hills mansion offering a luxury car to anyone who buys it before the deadline. But why are these offers being made? The new ordinance in question was voted through in November. Shocking figures have recently revealed that over 28,000 people in Los Angeles are now homeless, a harrowing statistic that really hit home with the electorate looking for change. It was evident that something had to be done, so the mayor and city council took the controversial decision to introduce this new tax system. How does it work? Simple. A 4% tax is applied to sales between $5 and $10 million, and 5.5% for property sold for more than $10 million. It's expected that this could bring in close to $1 billion a year, however this figure has recently been revised down to $672 million. That's still substantially more than the current transfer tax, bringing in close to $200 million. It makes sense that some wealthier members of the property market are now trying their best to undercut the tax. We've seen drop after drop in some luxurious, extravagant properties in the hope of attracting buyers. The $125 million Bel Air estate has seen a 70% reduction as it managed to bring in a starting bid of only $39 million. Where will the tax revenue go? While the amount of revenue might have been under or overestimated, the mayor's view is clear. So far, they have estimated that it will provide enough funds to build 26,000 affordable housing units and offer tens of thousands of people rent assistance, income support, and help them prevent eviction. Looking at Los Angeles over the past year, it's fair to say that some of the problems elsewhere in the United States simply don't exist. The median prices of houses in the city regularly break the $1 million barriers, at a rate that doesn't look like it's slowing. Therefore, it's fair to say that the $5 million cutoff for the mansion tax isn't considered luxury living in Los Angeles. However, for some people $5 million is an enormous sum. Therefore, if the tax does become implemented before April 1st, we'll see higher sales in the property market, but we also expect to see some interesting offers too. While the long-term impact of this tax isn't yet known, it will certainly have forced some mind-blowing decisions in this exciting chapter of Los Angeles real estate history.